Today I am here with the new accountancy video, that is Accountancy Class 11, and the chapter is Financial Statements, that is Financial Statements without adjustments. In this video we are going to discuss trading account. Now, what is trading account? Trading account is a statement which is prepared by a business firm. It shows the gross profit of the business activities during a specific period. It is a part of the final accounts of the entity. In other words, the trading account gives the details of total sale, total purchases, and trading account relating to the purchase and sale. This account is prepared for calculating the gross profit or gross loss arising out of the activities or the trading activities of the business. This account is prepared to know the gross profit or gross loss arising out of the trading activities of the business. Next, we have the features of trading account. Trading account has the following features. Number 1, it is the first stage in the preparation of final account statement of a trading concern. Means when we are making final accounts, then on the first number we prepare trading account. It records only the net sale and direct cost of the goods sold. Net sale is shown on the credit side and the direct cost is shown on the debit side. Number 3, the balance of this account discloses the gross profit and gross loss, which is the main purpose of preparing the trading account. We prepare trading account just because to know the gross profit or gross loss of the business. Number 4, then we transfer the balance of trading account, that is the gross profit or the gross loss, to the profit and loss account. Next, we have contents. Now, what are the contents of a trading account? Whenever we are preparing trading account, there will be some items which will be shown either on the debit side or the credit side. But what are these contents? Number 1, opening stock. Number 2, purchases. Number 3, direct expenses. Number 4, gross profit. Number 5, closing stock. And number 6, net sales. Now we have the format of trading account. Let's see the format of trading account. Whenever we are going to prepare trading account, then the main title that is trading account will be written in the center. Then we will write for the year ended and the date will be mentioned like 31st March 2020. Then we have two sides, debit side and credit side. In the debit side particulars, we write 2 opening stock, 2 purchases, and if there are some purchase returns or we can say return outwards, then those purchase returns or return outwards will be deducted from the purchases. So here we will write only the net purchases, and net purchases will be got with the help of purchases minus purchase return. Then we will write all the direct expenses here, like to wages, to carriage inwards, to freight inwards or cartage. We can write here two direct expenses. Direct expenses means all those expenses which are incurred during the process of production. So we will write all the direct expenses in the trading account debit side. Then in the credit side we will write by sales, and if there is any sales return or we can say return inwards, then that will be deducted out of the sales, and we will write only the net sales here. Then we will write the closing stock. Closing stock will not be written under the trial balance, it will be written out of the trial balance. So first of all it will be adjusted in trading account and then it will be adjusted in balance sheet. So we will write closing stock in the credit side of trading account. Then we will total the credit side and debit side and will make the difference. We will get the difference of credit side and debit side, and if credit side is greater than debit side, then we will get the gross profit, and gross profit will be written under the debit side, like to gross profit CD. Here CD means carried down balance. Carried down means we are taking this balance to the next account, that is profit and loss account, and under the profit and loss account it will be taken into credit side by writing by gross profit BD. BD means brought down. And if the debit side is greater than credit side, then there will be gross loss, that will be written under the credit side, and under the credit side it will be taken off from this side, it will be taken off to the profit and loss account debit side. Now the items of debit side are opening stock of goods. Opening stock means the stock which is left in the stock at the end of the previous year means in the last year the goods remain unsold becomes the opening stock for the next year. Next, total purchases of goods less purchase return. It means we will write the net purchases here. Number 3, all the direct expenses. Direct expenses means all the expenses which are incurred during the process of production, like carriage inward, freight, expenses, rent for godown or factory, electricity and power expenses, wages of workers and supervisors, packing expenses, etc. So, these are the contents of debit side. Now we have the contents of credit side. What are the contents of credit side? Number 1, sales revenue. Sales revenue means net sales. Net sales is calculated by deducting the sales return from the sales. Next we will write closing stock. What is closing stock? The amount of goods left unsold at the end of the year. At the end of the year, the goods or the part of the stock which is left unsold in the godown, that stock is known as closing stock. Then we will write gross loss. If the debit side of trading account is greater than the credit side, then the difference will be treated as the gross loss. So here students, we have discussed trading account. I hope all of you have understood this. Thank you.